This is one of those times when that normally is the best thing to do in a long-term boom. First of all, this boom since 2009, and we're going back 14, 15 years now, this is the first totally artificial boom in history. I predicted alone back in the early to mid 80s that in late 2007, the economy would run out of steam because the giant baby boom generation would peak in their natural spending cycle as they're raising their kids before they slow down and enter midlife. And that happened. Well, what happened this time is government stepped in. The 2008 did look like 1930. Ben Bernanke was the Fed chairman back then who studied the Great Depression, his thesis. And ever since, the central banks have been panicking, just printing money. They thought $1 trillion in 2009 would do it and we'd be back to normal. Well, no, they printed, actually $27 trillion in stimulus ever since. 19 of that has been government deficits and never a surplus ever since 2009. And the other $9 trillion has been just printing money and injected it into the economy. And so this entire boom has been artificial. Without all this 27 trillion, and that's a lot. That's enough to cause 5-6% growth a year over this long period. We would have been in a long, what I call recession or even a depression, much like the 1930s. So this is probably the most important economic event of this century. Is it better for governments to intervene and stop the economy from naturally having recessions and getting rid of a lot of bad debts and bad businesses and shaking out the economy, which is the essence of free market capitalism? It's not just investment in the future and taking risk. It's also clearing out the failures. Or, is it better to let free market capitalism reign? Of course, I'm a proponent of free market capitalism and think we have totally abandoned it since 2009. So what's happened here is finally in COVID, which was a natural crisis. I mean, who's going to blame anybody in government or anybody if the economy slows down for a year while we had this great virus, and it slows things down? But no, they doubled down 11 trillion of this 27 trillion that I count. And by the way, nobody's counting that and really telling people the number. It is stupendously high and shocking, okay? 11 of it came in the 2 years right after COVID, and that's what caused the sudden 9.1% inflation. We don't have any inflationary trends in the economy, which my indicators have been saying for decades. We're only going to go towards 1 to 2% inflation at most long term, because the massive inflation was the baby boom entering the workforce in the 60s and 70s. That's what it was, and that's over long term, okay? So this whole thing is totally artificial. The problem is we have the biggest bubble ever. You think the 2000 tech bubble was big, and that crashed 78% on the NASDAQ in 2002. And then 2007 and 9, what was that? I projected that 20 years before it happened. The baby boom slows down, and we have a downturn because of that. Well, they blew their way out of that, and now they've created the second and biggest bubble in all of history, makes the first one look like nothing. And unfortunately, David, a bubble has to burst. You can't have stocks and financial assets at the prices where a new young person coming in the economy has to pay $500,000 for a starter home that would have been $100,000 20, 25 years ago. This is what's putting a limit to this. We need the economy to get back to normal and get out of this mode that we can just stimulate our way with deficits and fake money to prosperity. And I think the economy is going to go down much harder than people think. And if it doesn't, then it means we probably will never have substantial growth again, because we've compromised the very system, free market capitalism, that made us so wealthy in the first place. The one reason only ever until this bubble burst, the government decided back in 2009 that they are going to fight recessions at all costs. One of the reasons when that 2008-9 downturn hit, it was exactly like the Great Depression. That's what I was calling for back then. So this has never happened before. They call it the Great Experiment. I think the experiment's going to fail, but that's yet to be proven. That's why I think this is the most important time in economics in history, because it's really free market capitalism has shown what it's done since the late 1700s, and particularly since the late 1800s. We've had so much progress, I can't even compare this to other periods in history. But now that things are going down for natural reasons, okay? Baby boom generation was a large generation. Of course, as it ages and stops having kids and getting them through school and moves into retirement where they're taking from the system instead of contributing, all this sort of stuff, of course you're going to get a slowdown. Do we let free market capitalism do what it has to do at that? Or do we say, no, the government can play God and be smarter? And you can imagine my opinion of, do I think the government should be playing God? No, I think it should not. And the only thing that's going to prove that is if this bubble bursts worse And then that's my view here. What we've seen since the late 90s when we had the first bubble, which was a natural bubble, like the roaring 20s, first burst, 78%, then we get another boom, and in that burst, we get a deeper recession, and I think this bubble's going to burst more than both of those downturns and prove that you don't get something for nothing, and you have to respect the economy's natural cycles and adapt to them rather than say, no, we don't accept this, and we're not going to have recessions anymore. If you think you can have an economy without recessions, then you're going to find out you can have an economy without booms in the future, because you can't get one without the other. Same with inflation and deflation. All cycles have these things, and people want the good cycle and not the bad cycle. People don't realize the challenges of the bad cycle is what creates the greatest innovations that drives the next boom cycle. The difference here is the government is going to react. They're going to fight it just like they have. But you got to remember, they lose credibility at some point. If you keep pumping things up, because there has been higher highs, but lower lows, okay? I'm saying that if the economy gets to do what it wants to do and wash out, we'll go back to the 2009 lows. That's what that bar goes, but that is 94% down for the NASDAQ, 80% for the S&P 500, and we'll be at 29 to 32 level. That's what the economy would do left to itself. I'm 100% convinced from studying it all my life, okay? But so they're going to fight it. We've got two levels of support. The next level down that I think we're going to see for sure in the next year is 10,088. Let's call it 10,100 NASDAQ. That would be a 6% decline, and hence not a normal. You get 20% corrections all the time. That's just healthy, normal stuff. That would be a notable downturn, but nothing, just a recession. I think stock market alone would cause a recession on that. Consumers would pull back, but it wouldn't be a depression. It wouldn't be a major historical event. And in the middle, you've got 6,700. That's just the early 2020 COVID lows there. If we just go back to that, that's 64% crash in the NASDAQ and like 58% on the S&P 500. So I'm looking at one of those three scenarios. I personally would rather see us get back to normal and let the economy wants to wash out the failures. We have more zombie companies and more bad, debts bad debts than any time in history. And the economy's not being allowed to flush those out. It's a healthy thing to do. But economists now think they're smarter, and they think recessions are the enemy instead of the natural part of the cycle. I tell people, if you don't want a nasty recession, don't have a bubbly, debt-ridden boom. That's how you do it. You don't have a crazy boom and then say, well, we can't let this in because we'll have a nasty recession. If you have a bubble booms are what cause depressions. The difference between depressions in history and deep recessions are the depressions follow bubbles, like the Roaring 20s bubble or the 1860s and 70s bubbles that end up in depressions, not recessions. We saw the highest inflation rates in history. I mean, all the way back hundreds of years, okay, into the 70s, into 1980, 81, and it started coming down naturally. Inflation would have come down on its own. The economy would have boomed on its own after the early 80s because the generational demographic trends were up. And people don't realize young new people are costly to the economy. They cost parents to raise, governments to support and stuff as they enter the workforce, and companies to expand space for, invest in the future. And then they pay off when they become productive workers. So it's a natural cycle. The 80s would have been a boom anyway, but the problem is once we started to fail, when we should have in 2008, when the baby boom was over, they've been relying on stimulus, perverting the economy and not letting the economy to adjust and make the best of a challenging situation, which is the real thing to do. And Mario Draghi said to short sellers and in the markets, I will print unlimited amounts of money if you want to short this market and help the markets go down, which the markets wanted to do because the market saw problems. So that's bad economics from my point of view. It's not dealing with the reality. I was in turnaround business and management in my early career. And what happens when a business hits a difficult point? They have to refocus on the most profitable segments. They have to cut costs, especially overheads, fixed overheads. You have to do something to get through a crisis. You don't just print money out of thin air, and corporations can't print money out of thin air. I think, which is the yin carry trade. You know why? That's the last place since the Europe, the United States started raising short-term rates substantially from 0 to 25 basis points up to 525, 550. The only place now you can get cheap money is through the yen. The yen, you can still borrow it near zero. So when Japan just raised rates a quarter of a point, now the traders and the people driving the markets are saying, uh-oh, now they're going to start raising rates. And now there's no more zero free money. And I think they're throwing a tantrum. I think that's the biggest reason the markets came down. But the bigger point is, if you keep blowing up a bubble, it won't take more. It'll take less and less to prick it because it's so overvalued. So it didn't take much to get this little short-term correction because the markets are so blown up and overvalued. They haven't taken a meaningful correction other than COVID, and they blew us out of that immediately in 14, 15 years now. So the markets are overvalued. That's the problem. Not that, oh, we did this or didn't do that. But the markets are way overvalued. The economy's been stretched. Consumers keep trading up to big. How often can you move and trade up to a bigger home? How much can you fix up your darn home? I think we're hitting what I call the exhaustion of demand, that it's been so stimulated for 15 years that there's a point where, well, I can't fix up my house again. Why? It's too much trouble, okay? You can't fix up your house every 3 years and make everything new or add a new wing, So I think we're just running out of steam here. The question is, how does this play out and how much does it play out? I'm just telling investors the upside is very limited here and the downside is the biggest it's been since 1929 or 1968 and more like 29, because this is a real bubble. So the 60s was not a bubble economy. It was just a strong economy that also ran out of juice. What? For the same reasons. A generation peaked in their spending, and then a bigger generation at great cost entered the workforce and caused the highest inflation in history. So you had down demographics, up inflation. That was 68 to 82, okay? Well, this is more like 29 to 42 when a generation peaked in spending, and you've got excess capacity and a smaller generation to follow, and you end up in a deflationary economy like the 1930s. So now we're not fighting inflation, we're fighting deflation, and that's why governments keep printing more and more money. They're trying to stay a step ahead of deflation. And I'm like, I'm sorry, folks, the economy's bigger than these governments and central banks and a lot smarter and been around for zillions of years. I think the economy should be allowed to wash itself out, and then we should be man, woman enough to deal with this and quit just taking the easy way out, which just means exponentially printing more money and spending money we don't have as governments. It's ridiculous.